Welcome to the table for the Friday, April 11, 2025 installment of Market Plus. Joining us now, Mr. Chris Robinson. Chris, thank you for going along with my craziness about patterns and what we talked about. Because, as I told you, soybeans are the story and have been the last 2 weeks. You can't move 40 down, 60 up and not think something's up. So my question is pretty simple that I wrote that I didn't ask you. Are soybeans, have they just shook off the news, or are they just naive right now to what's going on in the world?
No, I think that two things. The funds were caught short, and then now they've had to buy them back, and that's part of the reason we've had this rally. I think the world's realized that China doesn't take a lot of corn or wheat from us, so it really is. If you're concerned about the tariff with China, which is really what this is kind of all boiled down to, you got to be worried about three things: cotton, hogs, but especially soybeans. We grow 4 billion bushels. They take 1 billion bushels. So to have that, I don't care what they do with biodiesel or whatever, we need that demand. So that is the key. We've had kind of a weird year. We were at 1060, 1070. We went down to 960. Now we came up, I think we finished today around 1040. So, that was a really good recovery off the lows. Maybe that's the next level. I think people are watching 1040, 1050. So we're not out of the weeds yet. Most guys, I think, that I've worked with and talked to, they'd really feel more comfortable with beans up around 11. I think that's one reason we had seen the big shift in acres to corn away from soybeans, because we'd already been at seeing prices, 450 corn is more attractive than 1020 beans, is what it comes down to.
But we've talked about on this program since easily January, if not February, we're always going to have more corn. The outlook forum confirmed it. The acres report confirmed it. We're going to have beans don't seem attractive. Beans don't seem attractive. Are beans attractive now?
I think we need a little bit more work to go. I think that if we can get more short covering, or if we get some movement at all in the tariff issue, the first thing people are going to do is cover those shorts, right? So if there's probably a fulcrum or one trade to look at, like pro-China, anti-China, it's got to be soybeans. And it was interesting. I watch stuff all day long, and you're starting to hear other people in other parts of the financial industry say, you got to watch these soybeans now. So if we get any sort of a story there, I put it this way: I wouldn't want to be heavily short. I don't think you should be without a floor, right? Because this could all fall apart tomorrow, and we're back down to 960 beans, or So reward this rally with a hedge. I don't know if I've been ready to make a cash sale yet, but I would, as we go up, I would get a substitute sale with a hedge and hope that it continues to go higher, because what we don't want is to be sub 950 corn and going, wow, we missed that one again.
Your former boss has sat in that seat and said once it shows up in the mainstream about anything,
it's too late.
It's too late. Do you think that's happened?
No.
Okay. All right. Well, let's flip to feeders for a minute, because that's kind of tied a little bit. Live cattle more on the demand, but let's go Scott in Wisconsin. I need to put a little bow on feeders if I could. Will we see $3 feeders on the board?
Well, I can guarantee you, if I sell a 10 lot for myself, we'll be there tomorrow. Because that's the way the cattle have been trading, for the last 8 months. It's just incredible bull market. We got to within, I think, 3 or 4 cents of the, in the deferred months of seeing that $3 print. In fact, I was surprised that we went all that way and some computer program didn't get the print. I still think it's possible. We didn't do a whole lot of damage. We did some damage to the uptrend, but we didn't completely destroy it. So we had a sell-off. We've recovered. I think that moving ahead, it's definitely a possibility. The feeder cattle market has been the best bull market since the bottom of the COVID. But there are some things you got to watch. Number one, managed money is still long. If they decide to bail, if they decide, we don't want to have any more to do with being long cattle, then I think we have a problem.
You drew a line this morning on one of your charts, this bull trend on feeders.
Yeah.
What's that top of that bull trend? You say $3 is possible.
Anything's possible. Anybody that tried to call a top in the past 6 months, they really got hurt. That's why this has been, I talked about this before, how do you hedge something like this? If you're hedging with futures, you left a lot of money on the table. This market in the last 5 years has taught everybody that using a put option is probably your best hedge for cattle, because you set a floor, but you don't get hammered on the margin calls as cattle price continues to go higher. It's really what it comes down to. So at some point, we have these corrections. We're like, "Oof, I'm glad I have a floor." I did a seminar about 3 weeks ago, right before we had this big sell-off. And there were hedges that a lot of, it wasn't like I was alone saying you should look at these hedges. There were put spreads, put options. You can go out there and for a defined amount of money, for a defined amount of time, you can protect revenue. And that's really what a hedge is about. A hedge is about protecting that revenue. When the market gives you, we had a $60 rally from September to the top. Now nobody's going to get all of it, but you don't want to do is watch 40 of it go away. That's what a hedge is for. So I would say this, who am I to say that we can't go back and get a $3 print? I hope that we do.
Yeah.
But in the meantime, when the market gives you like the rally that we just had, the recovery rally, take advantage of it.
All right, I want to do weather, but I need you to answer this question 2 different ways. Jordan in Wisconsin wanted to ask you about planting. It is, the insurance date has started to roll. He's asking, to plant or not to plant? That's the question. I want you to answer that one, weather too early-wise. And then I want you to think about acre change. You've kind of already answered it on the soybean. It's maybe too early to tell. Everybody's planting right now. What do you think?
I think guys are locked in. I think when they do the survey for the government, a lot of that is, But I think at the end of the day, I've been in this business working with farmers for 15 years, but as a trader for 30. If you give a farmer a chance, they're going to plant corn rather than beans. So I think that they may say they're not going to do that. Now the question is, how many acres are we going to finally get? We'll have to wait a while to actually get that real number. I think it's already baked in that we're going to have more corn acres than we thought. But we'll see what happens. This same thing happened in 2012. We planted the most acres we've ever planted for corn, and then we had that drought. So even if we do plant a lot of acres, if we get a weather issue, all bets are off. So that's what I would say. If you're on the fence about planting beans or corn, depending on where it is, more and more guys I work with, they're starting to plant beans earlier than corn. So that's going to be something I would watch to see, and we say that unfold. But if you look at the seed sales and stuff that run, I think that's already pretty much locked in. And we're just going to have to wait and see how it turns out if we get a drought.
Let's do a tariff sandwich. Let's close the tariffs here. Let's do Tim in Minnesota if we could, Chris. Tariffs on, tariffs off. What can a producer do?
Well, I would say this. Know where your break-evens are. know what that price is. If we happen to get there, defend it. Defend it. And we actually had some earlier chances to do some sales earlier before we had this sell-off. Now we're getting right back up to, if you look at these corn, 460, 465. We topped out around 470 and 3/4, something like 479, something like that. So we're getting back up towards our highs, at least for this year. Reward it. Same thing with soybeans. Soybeans at one point we were at, I think, 1075. So if we get back up there again, don't turn your nose up on it. How do you do it? Well, again, I get it. People don't want to sell. They don't want to commit, but you need to hedge. And maybe you don't hedge 100%. Hedge what you can afford to hedge, but defend that revenue, because we've seen how quickly it changes. That's the one thing I think that's hard for even guys like myself to wrap their head around, the way the soybean prices move. If you're not hedged before it happens, it can be really disheartening. And also, it can make you make a bad mistake. The worst mistake you can make is make an emotional bad cash sale because you're frightened. I'd rather see you buy a cheap put and wait for a rally, hope for a rally. And we did that here. I had guys call me up and say, I have to sell some beans. I'm like, no, let's do this. Let's do a cheap put instead. Now we got a 65-cent rally. Reward that rally.
And frankly, it goes back to the previous question. We're about to plant.
Yeah.
People are going to be busy and not able to focus on every waking moment of what's happening. Let that work for you.
Let that work for you. Look at it once a week. I have guys that, they check in once a week. The daily moves can really upset you. And so maybe, dial back the time of being, what's happening now? Because we're going to be moving quite a bit, 20, 30 cents at a crack. So when it gets to that level, I can't say it enough. When it gets to your level, do something. Don't be afraid to set a hedge. Don't be afraid to make a cash forward sale. You can always re-own it. If you're concerned that it's 2012, we didn't start going bananas in 2012 until June 1st. So this is April, 14th.
Time is on our side? Question
Yeah,
mark?
time's on your side. Right.
Yeah.
And we may have to wait to see. You were mentioning the possibility of a drought. Every year, that's the drought possibility. So
Well, and that's a conversation I just had yesterday with a couple of farmers. They're on an area, and it's not very far away from where the rain is falling. And you look at anything in the Eastern Corn Belt, and they're concerned about, it's kind of wet. We're not going to be able to go. So the weather story's there.
yeah,
All right. Chris, good to see you.
good to be here.
Chris Robinson, everyone. Thank you so much.
Thanks.
All right, that's going to do it here for Market Plus, but I do want to say I'd like to remind you to sign up for that Market to Market Insider newsletter. It is free. Sign up at markettomarket.org. Hey, and when you get it, it comes every Monday morning just before 10 o'clock. Open it up. See what's in there. Let us know what you think. Vote on our poll, by the way. Next week, we are going to turn waste into an investment in your operation, and we'll have Jeff French here for his commodity market analysis. Thank you so much for joining us. Have a great week.